there. Let's bring in for the market's perspective Skyler Weinand, who's the CEO of Regan Capital. Skyler, great to have you with us. And I think Steve sort of hit the nail on the head, right? The president can say multiple things at the same time. Perhaps that is part of kind of the strategy of giving the market some hope to hang on to. Do you think this meaningfully changes the fact that we've seen the reaction function to tariff volatility just increasingly fade in recent weeks?
Yeah, look at the market today. The market's down a little, but U.S. stock market's up 7% for the year. So every day that actually goes by, the volatility from that initial liberation day recedes. And as time goes by, it's just human nature, right? So as time goes by, it has less and less of an effect on the market. And so the market today is pricing in those tariffs that we just saw on the screen, 30 to 40% roughly. And any lower tariff amount would obviously be very beneficial for the Asian stock market.
Scott, a function of how good that U.S. rally looks is also what we've seen with the U.S. dollar, right? If you take that out of the equation, are there better international options?
Yeah, so you could look at Europe for sure, and where PE levels are much lower than the United States, and interest rates have been coming down precipitously. A lot of European countries in the euro have been cutting. So you have this stimulus coming in from lower interest rates. You have a better value in terms of PE. All of those add up to potentially better opportunities in Europe. Looking to Asia, it's a little bit more difficult, right? You have Japanese inflation with Japanese wage deceleration. Market's not doing great. But yeah, it's the decline of the dollar has definitely been beneficial internationally. But as other countries have been cutting interest rates and have lower interest rates, and the U.S. interest rates stay high, especially on the long end, I would anticipate that $97, that 10 to 15% dollar decline that we've seen to reverse.
Why, though? Because we've seen in the past couple of months, the greenback hasn't been benefiting from yield differentials.
Yeah, and part of that was given Liberation Day, given the administration saying, hey, basically your money's no good here. you had a section, I think it was 899, that just got stripped out, that was going to potentially penalize foreign investment. So it's just a matter of time before these carry trades set back in and make U.S. Treasuries attractive again and accelerate the value of the dollar. So you are still dealing with the aftershocks of the administration saying, hey, get out of here. That's been receding, and stock market's gone crazy. I think interest rates potentially pulling investors back into U.S. Treasuries will happen. Rates may need to go a little bit higher in order for that to happen, and in order for the dollar to strengthen again.
Yeah, it's interesting because I think you believe that the next move by the Fed might actually be a hike. Yep. What are you watching for that would inform that maybe come September in terms of the aftershocks from U.S. policy into inflation, into growth?
Financial conditions are as easy today as they were 3 years ago. Basically, right when the Fed started hiking interest rates. You have the highest stock market cap in the U.S. in history. You have consumer balance sheets flush with cash, U.S. net wealth at $170 trillion, U.S. corporations utilizing the least amount of leverage in history. So you add all that up, and you have a tremendous amount of dry powder for the market to keep going, okay? Look at the most recent jobs report. Very, very bullish for continued growth. But inflation's still relatively high. And the U.S. government just passed a $3 trillion deficit bill, totally unnecessary spending. We're not in war currently, hoping that we're going to grow ourselves out of it. So all of these things add up to hypersonic growth and potential inflation that the Fed may have to walk back the 100 basis points of cuts that they put into effect last fall.
Really interesting perspective. Skyler, thank you so much. Skyler Weinand is CIO of Regan Capital.